All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. Excuse me. It is Wednesday, October 25th, 2023. Glad to be with you this morning and every morning, 9 a.m. Eastern Standard Time here on the YouTube channel. Glad that the video streaming is working. My computer did not freeze this go around, which is always nice. Let's go around the horn. Dow futures are up 52 points. That's majority of Microsoft. Microsoft is up this morning due to their earnings report that was yesterday. You're probably wondering, why is the NASDAQ down 96 points, down 0.65%? That's majority of that is Alphabet, Google. So again, Google has weight in the NASDAQ, but does not have weighting in the Dow. Microsoft is a Dow component. Alphabet, Google is not. So down 0.66%. S&P 500 futures down 0.41%. Russell down 0.66%, 1677. Did lead the charge yesterday as we had a nice day. Green yesterday at close, 4.885 on a US 10-year Treasury yield. That is bouncing this morning. Crude oil, we played short yesterday. Crude, it is bouncing slightly, but still below the break point of what we were looking for, around 86. It's now at 83.74 a barrel. We do have crude oil inventories at 10:30 this morning. Gasoline futures are up nearly 0.81%, $2.28 a gallon. Gold futures are up this morning slightly, 1986. Silver is down 0.72%, 22.95. Copper is down 0.43. Taking a look at the euro dollar, 105.78. That's down 0.12%. Dollar yen, 149.93. Still below that 150 level. 121.34, down 26 pips for a pound dollar. Bitcoin continuing to move nicely, 34,505. Believe that Blackstone or I think it was Blackstone, they put their the ETF or BlackRock, excuse me. BlackRock put the ETF back on their listing on their website for Bitcoin. So a little bit of some cheering there. 34,510 on the future side, 1793 on Ethereum. If you're more interested in the Bitcoin side of things, I'll go over it over the end of the week, since this is the make or break week we talked about. So this weekend's video is going to be extremely important. That's really going to give us exactly where we're going to go in terms of direction, because a lot of things are about to happen and a lot of levels need to hold. If not, then we need to have a very different conversation of what to be expected. There was something interesting today. I wanted to laugh this morning. I didn't stay up too late last night, but I did catch the end of this. So over the past 100 years, the surest sign of an oncoming financial crisis has been a Philadelphia baseball team winning the World Series. 1929 Philadelphia Athletics, 1980 Philadelphia Phillies, 2008 the Phillies also won. Both of them had financial recessions or crises of some kind. And 2023, well, the Arizona Diamondbacks saved the market yesterday by beating the Phillies. I just thought that was interesting. We can't always use that analogy for everything, but it's funny. What up, Clifton? Good to see you this morning. So I thought that was neat. In regards to that, here's a couple of things that we were talking about. We did have earnings yesterday. We posted that. So again, if you are interested in the details of it, take a look at our blog, take a look at our Instagram for all that. T-Mobile reported as well. They beat on the top line, but not the bottom line. Excuse me. They beat on the top line. They missed on the top line, beat on the bottom line. So top line is revenue. That's a miss. EPS is your bottom line or profitability. Boeing missed. Negative $3.26, cuts fiscal year 737 MAX deliveries. So guidance wasn't the best. Free cash flow was better than expected. So that's why Boeing is up a little bit this morning. Building permits were actually less than expected. So again, you can see 1.471 million new housing starts, slightly below estimates. Again, we still have an inventory problem. We still need more homes to be built. Building permits are actually slightly worse as well, down 4.5%. on a month-over-month basis. Let's see. Google reported earnings. They're down this morning, like we talked about. Microsoft beat. So again, Google's revenues increased 11% over the last year to a new quarterly high of 76.69 billion. Net income increased 42% year over year to 19.69 billion. Operating margins moved up to 28% from 25% a year ago. So Google doing their thing, but the stock is not loving it, just to the fact that they may have slipped in terms of cloud computing growth. So you can see shares tumble due to cloud computing growth. But what's Google's loss is Microsoft's gain. Microsoft earnings harness AI power as Azure cloud gains and the outlook, the guidance impresses. So a couple things stood out to me in terms of earnings, and I talked about it as well after the bell. So again, we do know that we had those conference calls. That was done, and we talked about it here. But Microsoft beat revenue estimate by 3.9%, EBITDA estimate of 6.8%. Azure growth 26.5% year over year. So again, ATVI is included in the guide. Again, it's not all organic. Reiterates flat year over year fiscal year 22 to 2024 EBT margin. So again, good guidance there from Microsoft. I have said it before, I say it again. Satya Nadella is the best CEO in the tech world. I do love Tim Cook, don't get me wrong. He's great CEO for a shareholder, but we need a little more from Apple. And they report next week, so important. But Visa stood out, and they're down this morning. But the consumer is doing well. This is the quote from the CEO. We reported another quarter of strong results reflecting stable business trends. Consumer spending remained resilient, driving growth in payments volume and processed transactions. Cross-border volume continued to be a tailwind fueled by travel growth from the ongoing recovery and summer tourism. So we know we're kind of going from, this is from years ago, but from buying stuff to doing stuff. Everyone was buying stuff online like Amazon, Etsy, Shopify. Now everyone just wants to go ahead and experience the world. We are focused on accelerating our growth across consumer payments, new flows, value-added services by investing in our brand, innovation, capabilities, people, and clients, so we remain at the center of money movement for years to come. So again, the consumer spending remains strong. The economy is doing well. They're also doing stock buybacks, I believe. I think did Visa announce they're doing stock buybacks? Yes, $25 billion multi-year share buyback program. So Visa, have a day. I know the stock doesn't look like it, but at least in terms of the latest report, but it's been pretty steady Eddie for the most part. You could see in a 3-year basis, it's right near the top end of the range. If you're looking for a place to possibly, if you can get a shot, is maybe around the 228, maybe 220 area. Again, the macro at least is holding up for Visa. It's a great company to own long term. And again, it's really a bet on the consumer that we continue to grow. I don't think MasterCard's earnings came out yet, but Visa is a good one. I really like the commentary. I love the fact that Visa is putting their money where their mouth is and actually buying back stock. This is the kind of confidence shareholders need to see before they put their capital to work in investing in a company or investing in a stock. Microsoft, if you remember last week, we had the 340 calls. They are now trading at 346. We were a week too early, but that's all right. Let's go and take a look at Microsoft 346.55. Where does that put us? Does that get us above anything that's meaningful? So right around here in the daily, if we're based at 346, do you want to do the 350s here? Not really worth it. If you get above 350, then we can start taking a look at getting to the 360, 370 range. So I'll place an alert there at 352.07 or 352.07. That'll confirm this break from the June highs. And then also the end of July pop that we had from last earnings where we fell. So we would actually recapture the actual breakdown from the last earnings. So good to see from Microsoft. Let's go and take a look at Alphabet Google this morning. We are trading at 131.60. That gets us to where? 131.60 gets us to slightly above the 100-day moving average. 126.69, that's the level I see for a breakdown. If we break below it, I don't think we will. We do have a gap to fill here at 123.66. That's probably your target if you're looking to add a couple of more shares of Google. Again, if the macro trends hold up, we're going to talk about that this weekend because the close of the week is going to be very important. We got so many earnings coming up. We have a GDP reading, we have a core PCE reading, and we also have Powell today after the close, 4:35. He'll be speaking. So, more obstacles ahead, but we just got to keep pushing. No risk open right now, at least for us. We had Apple calls. Obviously, we took that on Monday. We had Tesla puts from last week. We took that on Monday. Yesterday was very, very choppy. Not much to do. We just had, I think, crude short. I also played Coinbase calls. Yesterday, we got out of that for Masterclass. That hit a bag. That was well done. So again, that was a little more of a riskier trade. That's why I sent that over to Masterclass. You could see here the 90 calls. I don't know where they are right now. Let's see here. Yep, you're trading at 84. 90 was the target. As long as you stayed above 80.73, if you get above 85.38, maybe we get another crack at the 90 calls. So let's place an alert there. But nice spike there. We played those calls and got out same day. So again, I got out of those puts anyways. So we closed them up, and you could see very, very well done on that. So well done on that runner. It got as high as 103. But again, we'll see if we get another crack at it. Mara was another one that I wanted to do, but they fell because they did a mixed shelf offering. That's a bond offering, meaning they want to borrow more money. They're sitting right now at the 50-day. This is a death cross. So Mara, not so much right now. Coinbase would be in the focus because that is still in a golden cross with the 50 above the 200. And we bounced off very nicely above that 80.73 level. So that's what we're expecting for that. That's really what stands out to me in terms of a trade. Other than that, it's really just beholden to earnings. We're holding some support on S&P 500 futures. We know this. What do we do from here if we just kind of hover around the 200-day? You can see it just kind of hanging out. Not much to do. It's going to be all about how we close this week. If we close below the 200-day this week, things are probably going to get weaker, and we're going to start looking at 41.55 and lower. But if we can have a weekly close on the S&P 500, guys, this is very important. I will reiterate this weekend when we have our video. The 50-day and the 100-day. You can't be below here. This is it. This is last call. You know, if you break this and you settle below this, we're talking about going to 4,000. Absolutely. And that's absolutely possible. Do I think it's going to happen? No. So again, let's see where this weekly candle goes. As long as you stay above here, 4,200, 4,210, the 200-day looms. It's going to be a very, very important make or break week in my opinion. I still think we go up, but it's important to go over every single scenario on possibilities so you guys are prepared and you guys are ready for anything, because at the end we are not in control of everything. We know that. We just have to react, and if we get it right, we're heroes, and if we get it wrong, we're losers. Welcome to Day Trader. Good morning, Jeremy. If anyone's has any questions, feel free to type it here on the chat window. I wish I had more for you today. Looking at Google again, kind of holding on to that support right around 130. You could play the gap to fill back to 138 if we get a little more action. But we do have Metaverse reporting today, or Facebook, depending on how you like to remember that company. We also have IBM, ServiceNow. Other than that, Meta's probably the one that overhangs. And then Thursday, Amazon to me is probably the most important one because that is very consumer related, very consumer direct, as we know. So if we see Amazon have weaker than expected consumer demand, someone is lying because Visa had a great quarter. So again, I want to see if that consumer is still strong. Are they still consuming? Are they still buying? How was Prime Day? Did Prime Day do well? Did they do better than last year? That's all we can comparable. The only way we could do comps, because 2021 and 2020, I guess we can throw that out the window, kind of a deviation from the norm in terms of ordering stuff online. Last year, 2022, being a little more of a comp, slowing down, asset prices coming down. At least prices are coming down for goods. So let's see how Amazon's margins look. Let's take a look. Let's see how Amazon's guidance looks for the holiday season. How was their Prime Day event? Again, a lot of things that we want to know about moving forward with Amazon. I think they're going to have a good quarter anyways. But again, I thought Google had a great quarter, and again, the stock fell. But they have been holding up better than their other, brothers in the mega cap world in terms of tech, the Magnificent Eight. So it seems to kind of make sense that it takes a little bit of a backseat now. Again, if we start getting away from us, we'll see where Google ends up. But it seems like right now, that 20-day support right now is kind of holding up, at least on the 1 hour. We'll see how we open. Now we'll have a gap to fill on the upside. Just like Microsoft, we'll have a gap to fill to the downside. So again, it's one of those, give and take scenarios. We just have to wait and see. That's it. Got to be patient. Good morning, Carlos. What is your target for SPX, up or down? And in terms of today, you're just getting chop. So that's what we have been getting. You can see SPX closed above the 200-day. Thank the Lord. We're taking a look at 42.99 being the 20-day moving average. That'd be the first step to getting where we need to go. And you could see support, or just a very ugly head and shoulders, and we would continue down. So you're right at the point of which side you want to take. And if you're not sure what side to take, the best bet is to not do anything. You're just waiting to see if you get a break up or you get a breakdown. As of right now, you are in chop, chop, chop. Here's your Monday and your Tuesday. Up in the morning, down in the afternoon. Tuesday, up in the morning, down midday. Let's bounce again in the afternoon. That's where SPX is. Whole lot of nothing. Let's see, levels to add Roblox. Roblox is beholden to macroeconomic conditions and also lower rates. And since May of 2022, you have been stuck in a range between 47 and around 22. That's kind of it. We do have a gap to fill here at 36.69. If we can break above 33.70, we will fill this gap here at 37, depending on when their earnings is. If you get above 37, that's a really great sign. But what you're looking for is the break of these three. This three triple top, right? I don't believe in triple tops either. But again, we want to break out of that above 47. Yes, now we could talk about filling this gap at 66. It's a long road ahead, but Roblox needs a little love. We'll see if we get it with lowering rates, lowering dollar, a better macroeconomic condition where Roblox can actually fly off the runway. So think about these small caps and these growth names. You know, they're planes sitting in the runway. They need to be fueled. What's going to be the fuel? You need lower rates. You need bond yields to fall to make these stocks more attractive. You're not going to go ahead and invest in Roblox or trade it at such a high risk premium. Meaning you can still get 4.5%, 5% in a savings, right? We can get a CD. Why would I want to risk my money now when I'm getting paid more for cash? Again, we want Roblox to be attractive to the market. And how do they do that? By either bringing up their earnings, bringing up their profitability, or they're going to have to attract money flow from those who want growth. And right now, as we know lately, growth hasn't been getting the love unless you're the mega cap, big boys, the Nvidias, the Metas, the Apples, the Microsofts, the Amazons, those names, the Magnificent Eight, as we know. Thoughts on JEPI versus SPY-D? Would you rather own long-term? I mean, SPY-D is just the dividend ETF, and you can see how much that's fallen because now these dividend companies have to go ahead and increase their dividends, obviously to keep up with the market. They need lower rates as well. What was the other one? JPI? Never heard of that. Again, JPI looks a little better than SPY-D. You're looking at weekly support on the 3-year. Let's go and expand it up a little bit. I mean, if you're just looking for dividend, I mean, in terms of price action, I guess JEPI would be better than SPY-D at this moment. Yeah, I guess SPY-D looks fine too. Again, you're below moving averages that I don't like. If you take a look at the equal weight S&P, that's doing a little better, and that's all of the stocks, 500 stocks being equally weighted. Look how important this is. This is all the 500 stocks, not weighted differently. Amazon is not more than Apple and such and such. Last time we tagged that was in October of last year, the 200-day. The 200-week moving average, guys, that is very, very key. That's all bouncing off a trend line. If we can hold up here, these 500 companies, the S&P, the meat and potatoes, if they can hold, can't be just the mega cap names holding up this market. We need this to bounce. And we need small caps to catch bids. You're not going to get higher stock prices across the board unless small caps at least somewhat participate, if not go down. That's kind of the deal. And we're holding on to some very key support here, so we have to be extremely careful. That's why this week will be very, very important for the close. In terms of answering your question, Jeremy, I'd go SPY-D. I don't think there's any majority difference or major difference between the charts. Now, in terms of what stocks they own, whole different story. So I would assume JP since it's JP Morgan, would charge a higher expense ratio. SPY-D is State Street. That's more of an index. That's a cheaper fund. Just for that reason, I would say SPY-D is better off. You don't want to have managed funds because you're going to get charged low management fees and all that stuff unless you're speaking to a specialized portfolio manager, a specialized hedge fund manager that, you know, links up with what you want to do, maybe a little more risk, a little less risk off, that sort of thing. And when it comes to mutual funds and when it comes to those kind of funds, you're better off just buying an index fund. Keep it simple, buy an S&P fund. It's a lot cheaper and that's money in your pocket. But if you start going, oh, I'm going to go with the Goldman Sachs or the, you know, the PIMCO bond fund or that, there is expense fees, management fees, and that's not free. So again, you kind of want to save money where you can because that's meant for your investing. Thoughts on ONON? Never heard of them. Never heard of them. So I'm just going to do the chart. Below the 200-day. First of all, that's not great. And you also have a gap to fill. So the expectation here is to get you down to 22. That was the earnings from March. So let's see if we get there. And again, below the 200, and you got a death cross. Not ideal. I believe that based on the chart alone, not the fundamentals of the company, you're going to get lower. You're going to go to 22.20. But there you are. Eva, I hope that answers your question. All right, guys, we'll leave it there. Have a great rest of your morning. I will catch you guys on the market blog as always. Let's make it a great Wednesday. We will see you guys there and see you tomorrow. Cheers.